So want us to look on what I'm expecting this coming week, and it's already on Sunday. Guess an hour before the week opens, and before we even start, I want us to confirm from the economic calendar what we actually have. So let's see from the economic calendar what we have, so that we may see the news events that we have this week, so that we may avoid being chopped off. And I think it's the first week of the first month, so we need mm, uh, all right. So as of this week, as you can see over here, Monday, not really any USD news. As of Tuesday at 10 a.m. we have some USD news 10 a.m. and Wednesday we have NFP 8:15. Guess on Thursday also USD news at around 8:30, but on Friday I think NFP 8:30. So we'll need to be very careful because of NFP, and what usually happens is consolidations before, then later on NFP will be giving the direction. So that's, we need to be very careful of that, knowing that as of Wednesday we are expecting the news, the NFP news events. I don't usually trade the NFP news events. What I usually do is wait until the market has already traded, then I will try to maybe look for an opportunity. So these are the trades that I took maybe from this period. This was on Thursday. I had this trade already. SL really moved because this trade was a 1 to 2, and if you can check, currently it's a 1 to 5.9, because I think I had my stop loss somewhere below here. This is the 1 hour time frame to give me a 1 to 2. Let's see. Yeah, I think that candle slow, but when I saw this push going higher, right, towards after entering this second trade, I'd already journaled that. Then the market hit my TP. Then seeing the market reversing, I had to move my stops to the second trade low, but was taken out on Friday because the market stung around this level. We pushed higher. Also, as the market was pushing higher with this, seeing that the market was displacing above bearish fair value caps, didn't really displace with fair value caps. Off fair value caps, we consolidated a lot at this point in time. As the market was dropping lower, I had to close the trade. You can see this line labeled as a close. That's where I did close as uh, a loss, right? But was a well managed loss, nothing really big, and closed off the week, I guess I told you, around 1% up. So that's all. So I think I will be saving this video as part of the journal, but that wasn't really what I wanted to look for. I want to see how the market has been playing out and what we are expecting also. So gold had also some nice price action as of this week, capitalized on some, and also from some I did have an opportunity to learn from. So I start with gold, so I'll get rid of everything. All right, and then we start from the monthly time frame. We are starting another new month, and as we can see, the monthly time frame, we did form a bullish, I don't know, yeah, guys, that's clear, visible at this point, right? So what you can see is from the weekly time frame, is the monthly time frame, sorry, is we have been forming breakaway gaps, and a breakaway gap is a gap that whereby the third candle closes above the second candle size. So a good instance is that you can see the market just opened and impulsively continued higher. Same scenario as already happened at this moment in time. We have this high whereby the market has already closed above it, and to me this will be the first context area of which possibly I will be watching for either price to push higher or lower. So we have these all right, bottom right, I said the monthly IR. Definitely we have these monthly FEG at this moment in time, but is it likely to be traded into? To me, these are monthly possible breakaway gap, whereby I really am not really expecting it to be traded into. If the market is bullish, then off the lower time frame PDRAs, that's where the market will react higher off of. So we have the monthly FEG. Let me break away FEG. All right, so we have the monthly breakaway possible FEG. To me, it's a breakaway gap, and it's a breakaway gap because we can see these fair value, this candle printing, and if we have a candle like this, it means that we have lower time frame fair value gaps that are being respected going higher. And the first target will be definitely the previous month's high, which happens also to be the previous week's high. And if we see that we have fair value gaps that have been formed, and more with this candle, we can see we could see from the lower time frames that we have fair value gaps being formed going higher. So what happened last week? So this is the possible monthly IR, not the possible, the already confirmed monthly IR. All right, so the monthly IR there, and from the weekly we can see the market has been really impulsive going higher. So we also have this weekly fair value gap, and I want to show you a scenario whereby the market sometimes can be really bullish, thinking we gonna maybe continue higher, then the market reverses. A good example, but a different kind of one, is this scenario over here. Whereby we had this fair value gap, but you can see how the market was reacting to the highs, right? We swept the highs, we rallied higher, swept the highs, retraced and closed inside these liquidities. Also this one, we rallied, swept the high and closed inside the liquidities, which is a sign that of the weekly highs we could have then a possible drop like this. So after sweeping those, first sign of reversal. Then for this other one, we swept those highs, then the market dropped into these fair value gaps, though they weren't really breakaway gap fair value gaps, but you can see we later tapped into that fair value gap, then we pushed. This is a different kind of scenario, but if we see this week we are having a sweep of liquidity above this high, and then we displace maybe closing below these candles high, then we can expect maybe a drop into this fair value gap. So from these, if I can have it labeled, we have the weekly fair value gap. Is it really? It's also a breakaway gap, because you can see how the market did close above this candles high. We didn't really reject after sweeping that high. We ran that high by having that bullish candle. And if we try to see around this area how price had reacted to that level, it was also a key level that I was watching last week if you did review the video that I was making. So if we go to the daily time frame, you find that after sweeping the highs, right, on a Tuesday, the market was expanding, going higher above this high. So that was a sign that if we could have gone to the 4-hour time frame, and maybe if we had seen market displacing with fair value gaps above that point in time, then we could expect higher prices, right? And that's what happened. Market dropped back to that, those fair value gaps consolidated, then we were kind of pushing higher. So whenever we are maybe um, displacing above major liquidity points with displacements, and especially with these types of fair value candlesticks, it means that we have fair value gaps of the lower time frames that are being respected. So also in this case scenario, I have a key level that I will be watching for, because generally you can see we are expecting bullish prices, we are in a bullish trend, and what you can really anticipate, or what we want to catch, is bullish momentum going higher, right? So we want to get to go along with the trend. We don't want to call the high tops and maybe start selling at this moment in time. So this will be my weekly IR. Okay, so this will be my first context area, of which I will be watching what I'm likely expecting to happen. So if we drop past this level, this weekly IR, and we start displacing lower, then definitely my first target will be the weekly low, and later on maybe see whether the market will be dropping to that to that I to that weekly fair value gap. So my context area will be that weekly IR, the immediate rebalance. I want to label these as a previous week's low right there. So if we are bearish, and remember we have an FP, and that might cause maybe disruption or manual intervention into the market, then if the market disrespect these IR, then what you can expect is to see the previous week's low being taken first, then later on are we likely to see the fair value gap being traded into. That's the question we gonna answer later on. So we also have the previous week's high, which I think will be really triggered at the early part of the week. So if we may have a sweep of that liquidity, because this high isn't really being respected, and a good sign, let's try to look for one, is whenever we are having a reversal going lower, right here, is that in this case scenario, what we could have seen is this impulsive push higher into this fair value gap. But for this fair value gap, because it hasn't really done its job to push prices lower or to reject lower, then the next candle will need to sweep the previous candle's high and then drop, and that's what we actually had at that moment in time. Another case scenario is this one right here. The market pulled higher, created an order block, but the market wasn't really bullish. So what we did is we swept this previous candles high and also this major liquidity pool and pulled lower. So the same might be happening with what we have here, though we can't really try to call it. We need to have more confirmation what happens towards this previous high. If we sweep it, then later on we displace below this level, then we can anticipate to see this low being taken. And of the daily time frame, around that point in time is around the weekly IR, what we have are those daily fair value gaps. Let me align everything. So that weekly IR overlapping with a daily fair value area slash a daily fair value area. And then we have this previous week's low, which was on Monday. Yeah, which also happens to be the fair value areas low. But first of all, for the fair value areas low, we need to target the rejection block. I don't really want to have lots of markups. Want to right, yeah, the previous week's high. All right, so these are the weekly levels, the previous week's high, which also happens to be the previous day's high. Don't need to mark it there, you can see it by yourself. So if we have a sweep of that, then maybe the market starts displacing towards this low and also these daily fair value gap at that moment in time. So I need also to have these boom. All right, so I have this daily fair value gap, I think should be visible below, same to the weekly fair value gap, same to that monthly, and what do we have from the 3 month? The 3 months has 1 day before it closes, so somehow could we see maybe a rejection going lower? Also, yeah, also the monthly has 1 more day to close, hasn't really confirmed that 1 day 1 hour before it closes, so we need to maybe wait and see whether, but what I'm certain is this monthly breakaway will be confirmed. And that is also, if you notice at this moment in time, we have a weekly fair value gap that has been respected. So yeah, this is what we'll be expecting. So visibility below, also this one should be below. All right, nice one. So that's what I will be really expecting. Maybe see a drop going lower to the weekly, possibly to these daily fair value gaps, and of that we'll monitor what will be happening around that moment in time. So if we have price maybe doing something like this, if we drop lower to the weekly fair value gap, maybe onto the daily, want to see some rejections going higher, want to see some rejection going higher. But also if we fail respecting this area and maybe we displace below even at the midpoint of this daily fair value gap, then I can expect something like this, yeah, towards that low. So currently I'm 50-50. I'm not really in a hurry to be trading because of the NFP. So we might manipulate higher, then later on maybe drop. So the key level for me will be these daily fair value area as well as the daily fair value gap. So if we displace below this, start forming bearish fair value gaps, maybe price not respecting these daily fair value gap, then I will be expecting this case scenario going lower. So of my context, so that's what I will be watching for, nothing really much. So if we go to maybe DXY, All right, don't want to really delete what I have here. So if we start from the monthly time frame, let me ensure that these markups are below. Go to the daily, and that one is below. All right, end of the 4-hour time frame, we have this visibility below, this one also below, this one also below. So right, so if we start from the monthly time frame, what we can see is from the monthly time frame we had traded into that monthly fair value gap. We are currently rejecting of that, and remember from the monthly time frame we had this fair value area. Now we have this fair value area over here from the high to the low. So whenever the market trades really deep into a fair value area, then what we can usually want to anticipate is to see the fair value area low are being taken. So for this case scenario, though we have this fair value gap, to me I'm really anticipating to see this fair value area low being taken. But before then, let's have the rejection block. So this is the fair value area that I'd want to see the market rally to. So later on, not really this week, the fair value area low. And yeah, so the fair value area low, we have some resistance in form of that monthly fair value gap, whereby we can maybe see a pullback, then a continuation going lower. And if we observe the 3 months time frame, is the market was bullish, but currently what we are seeing is we are not respecting these immediate rebalance. With 1 day to go, the market isn't really respecting that 3-month IR, because if the market will have been bullish, then wanted to see a sting into that, then a continuation going higher. And if this IR fails after sweeping the previous candle's high, then we can target the previous candle's low, which of course is the CRT, right? Of that level, if we see what's happening from the weekly time frame, is you find that let's see visibility below before we get to delete it. All right, if we see what is happening around that level is we're having fair value gaps below that level, so which is a sign that indeed the market will be going for the previous candle's low, and which happens to be the fair value area low. So for DXY, I'm expecting it to sell, and if I'm expecting it to sell, then for EU and GU, I'm expecting bullish prices. So let's get rid of it and go back to what we've been saying. So we can expect these the market to be trading into that monthly fair value gap, monthly fair value area low, liquidities, which I've talked about. And now we're stuck into that monthly fair value gap, nice rejection. And this monthly time frame, to what levels can we really expect to see a retracement to? Is it likely we might see a pull towards these highs to form a monthly IR? We need to identify that from the weekly fair value gap of weekly time frame. And from the weekly time frame, what we can see is we already have a fair value gap which we could possibly react off of going lower, and this fair value gap has already been traded into. We had these prior week before this last prior week trading into that. We didn't really reject, but then this previous candle we swept the high, then we retraced lower. That retracement low, we have this low that this fair value gap has already been traded into. So if the market actually needs to be dropping, then it's not the fair value gap that will attract the market towards this low. It's either this low or this fair value areas low. So since the market stuck into that weekly fair value gap, we need to see the structure around this moment in time. We have maybe price, because this currently is a respect candle after tapping into that fair value gap, bearish fair value gap, sweeping also the candles high. So if we have all right, the prior week high being swept, previous week's high has been swept, top right and there. After we are sweeping that, I want to see the reaction of that moment in time. All right, so we have the previous week's high that has already been swept. I had a fib level at that moment in time, so I need also to maintain it, because what you're seeing is the market hasn't really stung back into the OTA levels whereby we anticipate a reversal. So as of the key level right there, what we could see is the market has stung into that weekly fair value gap, swept the previous week's high, and then we have been displacing. And the first thing we'll need to target is this weekly low. It's a previous week's low, but not the immediate previous week. But also we have the market has actually opened. If I clone it, then we have this low that I think the market could maybe we could see a sweep first, and if we displace below that, then we can expect maybe price displacing a low one towards this previous week's low. Remember, whatever we do here is totally the opposite to EU and GU. So I will not be doing EU and GU, but it's the opposite. If you are trying to sell DXY, then we'll try to buy EU and GU. Now the thing is, you need to identify a clear pair that you could trade between EU and GU. So what I'm seeing, or the only challenge I can have here, is we haven't really traded into the OTE levels. But what I can also see, before the market also using this price, like tapped into the OTE level, we reacted off that fair value gap, drop lower. Then whenever we fail to, that's when maybe we use these liquidities and also the fair value gap to retrace back into the OTA level. So these are the possible case scenarios that might happen. The market doesn't really need to trade into the OTE immediately. We can react over fair value gap, then later on, if we fail to displace, we can use now the liquidities at around this moment to push prices going higher. So the same might happen here. The market is failing to push towards the OTE levels, but we might drop, create a new lower low, then the market might pull back to maybe the OTE and as well as this fair value gap. So we need to be concise, have that in mind. But for if the market will be rallying towards this low, then we need to be displacing below this previous week's low with nice displacements, and then we can engage going lower. So these targets have already been met, what I was targeting, but this trade 1 to 2R hasn't really been confirmed. And what you can see is we can expect these during the first part of the week. So as of Monday and Tuesday, maybe then later on during the week, maybe we might pull back or we might go back higher into the range, then later expect the real movement to happen towards this fair value areas low. So that's what I will be expecting for this. As placing below this, I will target this. Then off this level, I will need not to continue towards this low, but ensure that I'm having more confirmations to ensure that indeed the market should be either going lower or we can push higher for short-term pullback, then continue lower. So that's what I'm watching for this week. Gold and maybe GU, gold and DXY, which are definitely, we don't trade GU. So if bearish, I want to see price reacting off that level like this towards that low. Then if we reach this low, we need to watch if the market will be pulling back, hopefully during the Friday NFP. And then if we pull back to maybe this range or these liquidities have been kept here, then yeah, we can see how we can maybe stay out or how we can re-engage in price. So that's what we can talk of this week, and hopefully that this week will be clean, and we can expect to maybe capitalize on this move. So until next time, guys, be safe.